All right, good afternoon, folks. Today we're going to take a look at HES Corp, symbol HES, and we're looking for ways to play some possible trades to the upside in energy. We know that we are now in a bullish period of the calendar where energy prices should start to tick to the upside, but as you've known, crude, heating oil, unleaded RBOB have all been under great pressure, and we've been looking and we've been scouting some potential stocks, in particular in the energy sector, that we could maybe scoop up somewhat of a perceived discount while we wait on a more technical bottom formation to get long crude oil and other energy futures. So after scouring through some of the major energy names, I came across this potential scan in HES, start date of around, per our smart market scanner, we have a start date of on or around February 14th, Valentine's Day, with an end date on around March 4th. So it's only about a 20-day calendar trade. Average profit's been about 6% on average over the last 10 years, 80% win rate. And as you can see, just a couple of minor drawdowns on those two losing years. So what I want to do is go over to the daily chart here and look at HES and see what it looks like from a technical perspective. So the first thing I want to do is see where we're at from a technical standpoint, and what I always like to do is just look for areas of confluence. So we want to take a fib tool and draw from this last major swing high to this last swing low down here at 35.80. You can see that we pulled back and made a 50% retracement level. So the 50% retracement as well as 618 are strong areas that typically act as areas of support or resistance or pausing or turning points for markets. So we do have that. And if we look at that particular 50% retracement level of around $55 or double nickel, we'll call it, does that also happen to be in line with other areas of support going back in history? So we'll scrunch this chart up a little bit, and you can see very clearly that the market has paused here, acted as both support and resistance going back for several years. So we have a 50% pullback from this high to this low, 50% retracement here at the 55 level, also at a significant support level, have favorable seasonal bias, and if you look down here on the RSI, we have a little bit of divergence. So we've had this this major swing down here during earnings, flushed down, put in a lower low on the RSI, but then we traded higher and then came back down, which gave us this last swing low. But you can see that was put in at a higher low on the RSI reading. So we have some price divergence there, favorable seasonality, 50% retracement at a significant support level. So we went ahead and got long HES via call options and out of the money put options in the March contract. As far as target goes, we know that our smart market scanner has said that we've had an average profit of about 6% over 10 years of data. That would take us up to about $59, $60, which would be right here at the next area of resistance, or the 382. Could also see the market potentially coming up and testing or retesting this initial breakout level up here in the 61, 62 area. So those are my targets here, up at the 59.5, 60 area as first target, and then we'll be looking for about 62 as next target. Keeping our risk right down here below 53.70. So taking a long position here, looking to target up here at this level, risk down below that level, which gives us at least a 2-to-1 risk-reward ratio on the trade. So that's what we're looking at on HES. Hope it helps, and we'll see you on the next update.